Well, it's encouraging. We're going into the second quarter earnings release at the moment across Asia and China as well. And we're going to see some quarter-on-quarter improvements in earnings coming through. Now, we're going to wait for these numbers really to come through, but at least the GDP numbers give us a little bit of a better outlook that we're going to have better earnings numbers as well. Currently, the market is seeing a Q1 decline of 20%, but by Q4, it actually expects a growth of about 4 or 5%. Across the region. So we need to see Q2 and Q3 really moving into that, towards that positive territory again. So these GDP numbers that come out suggest that might well take place. So fingers crossed.
What will drive better earnings? Because it's clearly not going to be the consumer. If you look at the China data points, and retail sales are weak again.
Yeah, no. So some of the retail numbers are a little bit weaker. There's a couple of things that could drive this. Inventory restocking, some of the confidence that is coming back, some of the supply chains that were frozen in the first quarter of the year starting to ease up a little bit again. And of course, although these numbers are still down and retail sales not very weak, it's not as bad as it was maybe in the first quarter of the year. So we're seeing a little bit of revenue growth in some of these sectors coming through as well. So hopefully, that's the anticipation, right? So hopefully we're going to see over the next 2-3 weeks confirmation of that in the earnings numbers.
You've downgraded the mainland China market to neutral. Why is that?
Yeah, we downgraded China about a week ago for the very simple reason that we thought, one, it is expensive on an absolute basis. It's rallied very well. It's outperformed the rest of the region. The Chinese market, well, depending on which one you look at, is anywhere up between, say, 15 to 20% or so year to date. On a relative basis to the rest of the region, it starts to look expensive as well. But also, we were not really comfortable with some of the share price movements that we start to see. Companies that were moving very rapidly. There was talk about margin trading, pushing the market higher. Typically, that's hoping that the retail investor pushes that market higher. But on pure fundamentals, we thought that market was simply getting a little bit expensive. And so we downgraded it last week from an overweight to a neutral and looking elsewhere across the region for better exposure.